Hello, everyone. I'm Brian Roten, senior reporter at CoStar News Hotels. I'm joined today by Lorie Maring, partner in the Atlanta office of the law firm Fisher Phillips. Today, we're going to talk about the new laws governing taxes on tips and overtime. Before we jump in, Lorie, welcome to the podcast. Thank you so much for being here. Can you tell us a little bit about yourself?
Of course, and thank you for having me. So I'm an employee benefits partner. I practice in all benefits for employees, 401k, health and welfare, and also do a good bit of payroll tax, which is why we're here today.
Yeah, so before we get into the details about the laws, can you tell us a little bit about the background, the context of the new rules that are governing the taxes or the no tax on tips and overtime? So where did this come from?
Well, this was the campaign promise that Donald Trump had, and something that he was really advocating for as a way of alleviating tax burdens on lower income Americans, working Americans. But also, I think this had bipartisan support generally. So, this did have the supporters across the aisle. Um, in addition to helping employees, I think it was also intended to really improve the labor market and make, tipped and overtime jobs a little bit more attractive, especially in the hospitality industry. So hopefully it will ultimately have that effect.
And this was part of the big beautiful bill that was passed over the summer.
Yes, the one big beautiful bill passed on July 4th.
What does the law actually say? Because I mean, there's a lot out there. There's you know I'm sure there's a lot of detail, a lot of devil in the details kind of thing here. So what does the law actually say about the whole no tax on tips and overtime? How is it supposed to work? And who does this actually apply to, likely within the hospitality industry?
Well, yeah. So there's a lot here. We hear no tax on tips, no tax on overtime. That sounds very simple, but you are absolutely correct. Devil is in the details. First of all, it's really not a no tax. It is a deduction, which is a huge distinction. There are also dollar caps on that deduction and income limits. So it's really not an across the board exclusion from income or deduction at all. And there are a lot of nuances within it. And I think, there is a lot of criticism of this bill, and that, it really is, because of the income caps, it's really not helping and doing that much, because a lot of the lower income employees, income workers weren't really paying much tax anyway. But so how it works, if you are a single filer, you have to make less than 150,000 in order to take full advantage. Or if you're married filing jointly, you have to make less than 300,000 to use either the tip or the overtime deduction. If you make over that, the deduction basically just gets phased out. It gets reduced by $100 for every thousand. So, it is available. It just gets to be less. But with respect to tips, one key distinction is that this only applies to truly voluntary tips. So allocated tips don't count, automatic gratuities don't count. And I think especially for hotels and others, in certain hospitality industries, this is maybe going to be a big disappointment if automatic gratuities are a big part of the compensation. So that may be an opportunity for employers to, look at how compensation is structured, especially on the tip side, maybe to take advantage of that a little bit more and make it more attractive. But for employees, the maximum deduction for individuals is $12,500, and for married filing jointly, it's $25,000. And that actually is the same on the overtime side. So also a lot of nuance on the overtime, because it is only federal overtime and mandated FLSA overtime. So state overtime, collective bargaining premiums, none of that actually gets counted. And most employers in states that have the extra overtime requirements really aren't tracking that separately. So this is a huge payroll issue for many employers because this law goes into effect on January 1. So it's retroactive. Nobody had a heads up this was coming. Nobody was prepared. It's sort of unusual for a law like this with such significant changes to payroll practices for it to go into effect retroactively. So I do know payroll companies are scrambling a little bit, and a lot of my employers have been calling, trying to figure all of this out.
I can imagine. So just going back to a couple of things, with the tips part, it with it being a deduction, so that means it's not like you get your paycheck. And I mean, if it's tipped, I mean, there's a matter of like you get it because like if it's at a hotel restaurant and the server gets tipped through the credit card payment as opposed to cash. Well, that's going to be reported because that's in the system. But if it's cash, I mean, it's the same issue as previously with cash tips, whether you know that
Right.
employee actually reports it or not. So that really doesn't
Well,
change a whole lot there, does it?
no, although it may encourage employees to report those cash tips a little bit more. So, nothing has changed with respect to an employee's obligation to report tips. And what is also going to be surprising for employees is that in their pay, in their W-2 and on their pay stubs, they are still going to see those tips included.
Mhm.
So the employer still includes the full amount of tips in, the box one wages. They're also not exempt from FICA at all. So even though they have this deduction available, and it's an above the line deduction, so it does reduce income in that sense. You don't have to be someone who itemizes deductions in order to take advantage of it. It will be an above the line deduction, but employees will still pay FICA on both the tips and the overtime components. But yeah, it's all, nobody is seeing any immediate impact of this rule in their current paycheck. The withholding is still there. FICA, everything is still as normal. They will just see the impact of it when they file their tax return.
Gotcha. And you had mentioned that you're hearing from a lot of you know clients who are employers within a lot of different industries that this may apply to. Uh, when they're calling, they're asking you questions. What are some of the misconceptions that you're having to dispel?
Well, I think the biggest one is that this is a deduction, not income.
Hmm.
I think the other is with respect to the overtime, in terms of what is excluded. There is the misconception that all overtime is excluded. So that is not the case. It is only the FLSA mandated portion. So the extra half is
Hmm.
what's excluded. So the regular hourly rate that you would otherwise be getting that's paid for your overtime hours is not eligible for the exclusion. So that's been a big one. And I think the other being that this is not necessarily excluded from income in state or local jurisdictions. So not all states necessarily follow federal law. So you're going to have a lot of disconnects in terms of how these are applied for tax purposes. And I think, again, a lot of confusion on the part of employees. And, truly, I think this is something that employers are going to be getting a lot of questions about.
Sure. And I'm sorry if you already stated this, but in regards to overtime, how is that handled? Is that you said this is still you still see it in the paycheck, the regular taxation,
Yes.
and then it's later on when they file their returns at starting in February the next year, that's when they can make up the difference.
Correct. So employers have an obligation to notify employees on what is considered qualified overtime or qualified tips for the deduction. So, which is, at this point for 2025, another point of confusion because the IRS is not updating any of the, W-2s or any of the tax forms. But employers are required to track these amounts and and disclose that to employees separately, which is not something that they're currently doing. So for the overtime piece, whatever that, you have to now distinguish between state, other employer differentials or overtime components that might go into pay. You really have to break that down and figure out what exactly is the mandated part. And then report that. Right now, we're suggesting employers put it on box 14 just as an informational item. That seems to be the best practice for both the overtime and the tips. But with respect to tips, again, employers are going to be backing out allocated tips from that, as well as what is considered an automatic gratuity, which is a service charge, more of a wage versus a tip. So, I mean, that is already something that is, in the current law that, they're treated differently. Automatic gratuities aren't eligible for the FICA tip credit. So this isn't a new concept, but from an employee perspective, they're probably treating that, automatic gratuity in their mind the same as a tip. So this is going to create some disappointment, I think.
Yeah, and something you just mentioned with the tip credit, does it, as far as like having to make up for any kind of, if someone doesn't make enough tips to bring them up to, the minimum wage necessary, how does that all play in as far as the taxation on the tips for that? Or, especially for tips
Well,
that go on up, take them above the minimum then.
yeah, I mean, it's none of that will really be impacted because,
Okay.
again, this is really all going to be an employee income tax event. This
Mhm.
isn't necessarily an employer income tax event, and not much has changed other than the employer has to help the employee out by identifying, at least as to what they're paying, what amount is going to qualify for the tip credit or qualify for the overtime. And really, to make it even more complicated for hotel employers, there's a
Mhm.
no double dipping rule, which we're not going to try to explain, but you can't have both a qualifying tip that is the basis for the tip deduction that then gets it fed into your qualifying overtime deduction. So
Okay.
that's going to be a real tricky one, I think, for employees at tax time.
Sounds fun.
Yeah.
All right. So, you and I are talking right now, end of October. The bill, was passed and signed into law over the summer. What should employers have been doing up until now, and what, do they still need to do, knowing that a lot of this is on the employee side? Like, how much internally do they need to do? How much communication should they be doing to make to, at the very least, lessen as much confusion and, you know, complaints down the road?
I think, you can look at this as both opportunity for clarification and also opportunity to evaluate your compensation structure and are there ways to use this to your advantage, or is there a way to maybe take some of those automatic gratuities and sell it as we'll transition, so one, I think you can look at it as opportunity and make those jobs more attractive because of the this deduction in terms of advertising and how it's communicated. But certainly for existing employees, I think because it is the employer's obligation to communicate what is qualifying in terms of the deduction. I think you're just going to have to do some sort of FAQ, town hall, communications, provide resources, to help employees understand, or they are going to be really frustrated over this. So I think the more you can do and the earlier you can do it to manage expectations is going to be helpful. Hopefully, employers have already been talking to their payroll providers, and or if you're doing it in house or with your own systems. I mean, looking and already implementing ways to track, and especially retroactively trying to figure out how to break out and identify those items of compensation that you probably don't currently have coding for in your payroll. The good news is this is a little bit of a good faith year. So, obviously with this going into effect retroactively, there is some relief. That doesn't mean you don't have to comply, but it just means, you're given a little bit of grace, given the retroactive implementation. But employers still will need to have some justification and make sure they keep their records for how they determine the amount of the qualifying tips, both for the employee and in case they get audited. The IRS may want to see, well, just how exactly did you come up with that amount? So you'll want to make sure you keep good records.
Gotcha. So then on the employee side of things, just to clarify, you know, thinking within the hospitality space, within a hotel, you know, housekeepers, uh, bell staff, in a restaurant or bar, who typically would qualify as an eligible employee for the tips and for the overtime.
Well, the good news is pretty much anyone in the hospitality industry receiving tips is going to be eligible. The IRS came out with because of the concern, of
Hmm.
course, that everybody was going to suddenly be a tipped employee going
Yeah,
forward after this law.
and tip a
The
CEO.
Yes, exactly. Everyone's tipped. The law requires that it be sort of a historically or a position that historically was a tipped position,
Hmm.
and the IRS has been pretty generous in terms of recognizing what that is, and in fact expanded it a little bit even for the FICA tip credit to now include
Hmm.
like GP professionals. So this is, I think, for in the hotel and hospitality industry, pretty much all of those that you mentioned are they're going to be qualifying eligible individuals. But that is a good point. Not everyone can get a tip and qualify for this. You have to be within the named occupations in the regulation.
Gotcha. And so for those who do qualify, anything else that they would need to know as they're, you know, going to end up preparing to file their taxes next year.
Oh gosh. I think I have a feeling that, this is for those who maybe are doing it on their own. This might be the year they want to get some help. I don't know, but, presumably TurboTax and all of those tax softwares, will be updated and able to help. But I think this is going to be kind of a new level for individuals who are used to a pretty simple tax return.
Hmm.
And again, I think that's where employers might be able to, help give a little bit of guidance in an FAQ. And if you want to be really generous, I mean, I don't know, especially for those who have tips and overtime, if you want to make, tax help available, although that's a pretty big step.
Certainly a possibility. Any final thoughts? Anything that we didn't cover that you think would be helpful for our listeners to know?
I think again, this is, hopefully this is something that employers can use as a recruiting tool. I think the first reaction is what a burden, and no doubt it is a burden, but always try to find some silver lining in it maybe. But yeah, the devil is in the details. So we've, really just done kind of a high level here.
Oh, sure.
Yeah. So, obviously you need to be working with your advisors and making sure that, everything is reported and captured accurately.
Absolutely. Well, Lori, thank you so much for taking the time today to break some of this down for us. It's a very you know very interesting topic, and it's going to affect a lot of people. So all the clarity you provided today, I think, is going to be very helpful. So thank you.
Oh, well, thank you. It was great to be here. Appreciate it.
Hi, I'm STR's Isaac Colazo.
And I'm co-stars Jan Freitag. And together we are the data geeks behind Tell Me More, a hospitality data podcast work.
Every month, we bring you a fresh take on the latest hotel data, insights into the travel trends behind that performance, and the big picture topics you should be thinking about.
And we also don't mind getting into some good-natured disagreement from time to time. Hey, when Isaac and I start talking data together, anything can happen, and it usually does.
Subscribe to the podcast on Apple Podcasts, Spotify, or wherever you like to listen.
Thanks for listening. This interview was recorded October 31st, 2025, and produced and edited by Brian Roten.